Good afternoon, everybody. I'm Kirk Chevis.
Hey, Ken Turkington here.
All right, let's get into this Fed rate hike that occurred yesterday afternoon. So after going about 3 years without raising rates, in March, the Fed came out and cut a quarter point. And yesterday, increased, sorry, they increased a quarter point. Yesterday, they increased a half of a point. All right, first question to you is, what is the Fed and what is the job that the Fed does?
Yeah, so the Fed they control the money supply for the United States, or the cost of borrowing. So what was interesting in the press conference afterwards, it was reiterated a number of times, but the Fed's job is to sustain maximum employment and maintain pricing stability for the goods and services that we consume.
All right, so Fed funds rate, what is it?
Fed funds
everybody
rate,
understands it's not mortgage rates.
It's not mortgage rates. It is the interest rate that is set, that banks borrow money between banks or from the Federal Reserve on a very short-term basis. So it absolutely affects credit card interest rates, consumer debt like car loans, home equity loans. It affects those transactions because that's the money that banks are lending. So if they're borrowing it at a higher rate, then they have to charge consumers a higher rate.
And the Fed funds rate greatly affects prime or prime plus a margin loan, like a home equity line of credit.
Yep.
Or adjustable rate mortgages, et cetera. Okay. Why are they hiking right now? What is the main reason they're hiking?
It's inflation. So when inflation exists, that means everything gets more expensive. And inflation is a number that says that goods and services or things that you consume the price is increasing at a certain rate. And the target rate for that the Fed has determined had been 2%. The last measure of that, depending on which one you look at, was near 8%. So those price increases are unhealthy. And so that's what the Federal Reserve their main focus is, to try and keep our growth rate and the cost of our goods going up at a healthy balance.
All right, so inflation is causing hardship. Gas, milk, eggs, bread, groceries, eating out, everything.
Every single thing. Especially, it's had a massive impact on housing's been the biggest increase, maybe next to automobiles, or somewhere in that close range that we feel consistently.
Okay, so yesterday, let's tell everybody what's happening kind of in the last 45 days, and then specifically today, what's going on. The market has built, so the Fed's going to meet a bunch more times throughout the rest of the year. I think it's 5 more times.
That's what's scheduled. Yep.
That's what's on deck for them to meet. And the market starts building in anticipation of what the Fed is going to do. And they come out and they cut a half. Some people thought they might cut 3/4 yesterday. What's happened today? What's going on in the
So if we go back to that 45 days ago, right? We'll call it the stock markets as well as the bond markets, which the bond markets directly affect mortgage rates, not the Fed, but the bond. So 45 days ago, the markets started anticipating or digesting what they thought they would hear yesterday, which was that 0.5 or 0.75% increase to the interest rate. So that's why our mortgage rates have increased leading up to this decision. And then yesterday, right after the press conference, mortgage rates improved and the stock markets improved. Now, that was short-lived because there were probably some investors that were betting on a different result. They may have taken some profits, but when the Fed came out and said they were increasing rates by 0.5%, mortgage rates actually eased up or eased down and improved. Contradicts what most people would think. So that initial reaction was digested. And here we are today, where the stock market has lost all the ground that it gained yesterday, and mortgage rates have inched up higher than when we were prior to the announcement and the press conference that followed.
Okay, so Dow was down over 1,000 last I looked. 10 years closing in on 3.10. It's up like 165 basis points in the last 6 months. Mortgage rates in turn are going to be somewhere between 5.5% and 6% here over the next few days. Highest rates we've seen in a decade. Is this going to do it? Is this helping to turn the tide? Is this turning the tide?
Yeah, so there's
market?
a couple of things that were going on there, right? Hey, is the Fed now finally starting to have an impact to slow things down? I guess you could say yes, because they've been rumbling about this cut coming. But more people believe that, yes, that more, that more people believe that this is just a natural attrition of cost of goods going up, that this will settle down. An ideal world is during that meeting, if they would have said, here's what we're going to do, and these are the measurables and the incremental differences that we're looking for over the next 30 to 60 days, I think everybody could have relaxed. But they answered it in such a way that it was really vague, and they believe that a recession is avoidable and that this is going to be a soft landing, not easy, but a soft landing. And most of the investors believe differently. So we still have a conflict in the direction, hence the reason why the market went back to its uncertain state. So we were hoping for some calming, soothing news with conviction to give us direction. We still have to wait another, till each meeting and the economic data comes out. So it was a formality, but it really didn't change the current events.
But Jamie Dimon from Chase came out and said 33% chance soft landing. That's what the Fed's hoping for. 33% chance mild recession, 33% chance severe recession. That goes back to your point that you just made of we're still in uncharted territory in everyone's belief that the Fed has control of this and that the soft landing is the way that it's going to go down. We're just not sure yet. Hence, you're seeing the 10-year treasury run up right now. So we got to hang on, guys.
Yeah, the kind of the moral that I saw happening there is the Fed said a couple of times in their press conference that they don't control supply, they just control demand. And this chaos is helping control the demand, meaning if you've got somebody that's looking to buy a home and it's not critical, those people are now questioning, right? So it's not a bad time to buy necessarily, but if you're on the fence, they didn't do anything to help you feel good about proceeding now. I think the impact is there will be less people that are rushing out the front door to go buy a home because they want to wait and let the dust settle.
We'll end on that. Perfect way of saying it. Thank you so much for that great information.
Ditto.
We'll catch up soon, guys. Thanks.